Well, good morning, Bob.
Good morning, Bill.
This is FNC's Morning View. I'm Bill Rayburn with Bob
Whoa.
Dorsey, and we're in these chairs that go up and down, sort of like the market, right? It's go up and down like the
I
market.
never know which way you're going.
Well, it just went down. And so we've been talking about markets going down and back up and where they are in the cycle. First, let's take a step back and talk about cycles. Are you a believer in cycles?
Well, the reality is that there are cycles, so therefore I am a believer in cycles.
So it is what it is, right?
Yeah.
I think markets go up and they go down.
They do.
And so there's been a lot of speculation all the way from markets, the real estate market's still, housing market's still going down to it's at the bottom to we've got at least another 20% to go. What do you think? Are you just going to tell us other people what they think?
Well, you know, on the one hand...
Are we going to get the Dorsey, are we going to get the Dr. Dorsey opinion?
Well, I think we're still got a ways to go down, unfortunately. I think it's going to... I don't think it's going to go down as fast, and clearly there's some markets that are on their way up.
But on average, you think it's going down more?
Yeah, I'm afraid so. I think it's still got a ways to go.
So what that means is that we have a sale going on. You know, it's always amazing to me. If a clothing store has a big sale, everybody rushes in and they want to get things at a discount while it's on sale. But if markets had a sale, people say, well, I'm not going to buy that.
Well, you know, it's funny because in the real estate market, think about the strategy. If you're going in to buy clothes, they've got the sale, and the sale is from Wednesday through Saturday.
Okay, and you know the period of the sale,
right?
But they might have a bigger sale on Sunday.
Yeah, you never know. But they said this sale is only until Saturday, so you better get your clothes right now. You know. But on the real estate market, no one knows when this is going to end, when the sale is going to end. And in fact, it seems like the sale keeps getting better and better and better.
So you think, I'm just going to wait a while, I'm going to sit on the sidelines and see if they're going to give me a better deal.
Interest rates keep going lower, and the prices keep going lower. Last month, our measure of prices went down a little less than 1%. That was for February. And
30-year mortgage rates are at an all-time
low, you know. And so now you have to figure, all right, is it a good time to buy or is it a bad time to buy? Wall Street Journal last week.
Well, maybe let's say it another way.
Right.
It's a good time to buy. Is it going to get to be a better time to buy?
Exactly, right. It clearly is a good time to buy. I mean,
rates are low,
30,
prices are low.
Yeah, 30 years down was lowest.
It's below 4.
Yeah, it's all-time low.
Did you think you'd see below 4 again in your lifetime?
No,
You probably saw it below 4 early in your lifetime.
Right. But you know, the affordability is at an all-time low, and so it's a great time to buy. But then the question is,
you mean affordability is really at an all-time high?
That's
right?
what I meant.
Yeah, I know what you're saying.
Okay, so
is that up or down thing?
Right.
Okay.
Back to it's confusing. So anyway, the question though is, let's say you bought today, and there's some speculation the price could drop another 20%. So do you want to buy something today and see the prices drop another 20%?
The proverbial phrase, catch the falling knife.
Exactly.
You don't want to do that.
No.
But can you time the market?
Well, a lot of people have tried, you know.
In the stock market and the real estate market.
Exactly. And awful lot of people got it wrong, a few got it right, you know. But I think it's a random choice.
So you think it's purely random? It's like a random walk?
No, it's not random, but people have no way of forecasting it. You know?
Well, so let's talk about what the pundits are saying. Are we at the bottom? Are we near the bottom? Or we still got a ways to go? So you got some quotes for us.
Yeah, well, you know, last week Wall Street Journal had a couple of experts come in and say, okay, it's a good time to buy now, or should you wait? And one is Eric Lachelles, who is with RBC Global Asset Management, and he says, you know, affordability is the best in 30 years, 34% decline since 06.
So they're already on sale. There's been a 34% discount.
The rents are now getting higher and higher. It's in many markets, it's cheaper to buy than it is to rent. The investors are starting to buy. You see that, and they're buying up houses to turn them into rentals and then later flip them and sell them.
Right.
And so that's all he says. Oh, it's time to buy right now. You know, and so.
So it's flashing green light.
Exactly.
We've got a sale going on, and this is a good enough sale. It may not be the best sale, but it's a good enough sale. So let me ask you this: if there were a $2,000 suit that was on sale for $1,000, but you might be able to get it for $500, would you hold out for the $500 or be happy at $1,000?
Well, since
Assuming you want a suit.
$500 would be a very expensive suit for me.
Would you hold out for the 500, or would you be happy at 1,000? That's what we're talking about.
Yeah, that's always the thing. You know, if you buy it at 1,000 and the price goes back up, you're really happy. If you buy it at 1,000, the price goes down, you're saying, "Oh, I was stupid to wait. You know, and I should have waited."
Suppose it goes down to 500 and then back to 15.
Yeah, I mean,
Would you be happy if you bought it at 1,000?
not as happy as if I bought it at 500.
But it's very difficult to time that $500 sale.
Exactly. And it could be a significant decrease. Gary Schilling took the opposite side. He's with Gary Schilling Company Consultant. He's the president. And he says that we're going to experience another 22% decline in median prices. And that's to get to Schiller's long-range forecast. You know, he's got a long-range trend. And looking at that, he says, okay, we got to drop another 22%. Plus, prices tend to overshoot the bottom. Just like they overshot the top, they tend to overshoot the bottom.
So you think it may be down to the 30?
It could be, you know, and he said that there's a current excess of supply of about 2 million houses, and there's an additional 5 million foreclosures are waiting in the wings.
So that's 7 million.
Right.
How long to absorb all that?
He says it's going to drop down to, prices are going to go down totally. They're down 34% from 2006. He says it's
Peak
going
to trough.
Right. He says that the
Or peak to
trough
current, I
is,
guess you should say. We're heading to reach the trough.
he says that that trough is going to be at 50%.
Okay.
Median prices over the whole country. And so he said, you know, home ownership was up to a little over 69%. It's dropped down to 64%, 66%. And he says it's got to go down to 64 or below.
Well, 63 is the number that economists have kicked around
Right.
as sort of an equilibrium.
So we've got to, I mean, so all of those indications are that we're going to drop quite a bit more.
So we're going to move out of ownership into rentership in some of
right.
these markets,
Right.
or demolition of houses.
Well, that's true. I think they've done that in several of the communities.
They have.
They've just gone in and bulldozed a lot of the properties. And so
That's like taking your suit and just throwing it away or burning it or taking it to Goodwill and disposing of it.
that's what my wife keeps doing after I wear it for 10 years.
Well, styles do change. Just like housing and clothes, styles do change.
Oh, that's what they tell me. I don't believe it. So,
I guess what you pay is irrelevant if you intend to wear it forever, right?
Exactly,
Okay.
right,
So
right.
it's a long-term good for you.
right. So anyway, you know, we're seeing some changes. We're seeing some markets increase. You know, some are picking up. Last month, in February, Cleveland had a month-over-month increase of about 3% that we saw, which was a pretty substantial.
For 1 month, that's
Yeah,
fantastic.
right. And if you look at the long term, yeah, which is surprising. You know, San Antonio is up over 2%. Riverside, Columbus, Phoenix has been increasing for like 4 or 5 months in a row.
They've come way down.
Well, yeah.
Way down. But you're talking about lots of employment, and now it appears in some of those areas employment is recovering.
That's the thing. I mean, that's what's really going to drive it. We talk about prices of housing as though they're autonomous, you know, but the fact is what's driving all of it is the unemployment. And unemployment is improving a little bit, but only because people are leaving the workforce, you know, primarily retirees. And until we get some major improvement in unemployment, getting it down to a more reasonable level, we're going to still have a weak economy.
Because people have to have a place to live, and they want to live near where they work.
Exactly.
And so we've seen some big declines, peak to where we are today. So you think from here we're looking at your own, the Dr. Dorsey opinion is we're going to be down how much more?
I'm afraid average I think is going to be we're going to drop probably another 10 to 15%.
10 to 15% on average. But you think there will be pockets where we'll see a flattening, even an increase?
Already are. Some places are turning around. Some places are improving significantly and have a good trend of improving.
And so if our listeners out there want to get a good feel for where things will improve, do they need to look at employment areas?
I think employment is going to drive it dramatically. I mean, that is the fundamental issue. Okay, if employment's down, people can't afford the houses, and they're looking for other jobs. They're trying to get out of that market. That's going to further depress housing prices. employment is the driver.
Let's shift gears and talk about a little of our follow-up discussion from last week. We had some fine folks on from DataQuick,
Right.
John Walsh and Heidi Russell, who talked about how the market for some of these companies, especially fintech, financial technology companies, has gotten frothy.
Right.
And so, what do you think about that? We see big multiples because revenue and EBITDA numbers are down given the market.
It's amazing, that there would be so much demand for these financial technology firms in a market where there isn't any significant volume.
Well, if we have a market of X today and it's going to be 2X in 3 to 5 years, then you've got significant growth built into that price, and that's what's driving some of these multiples.
Well, the investors, like I was saying earlier, are getting into starting to buy a lot of these houses for in anticipation of the market coming back. So maybe the expectation is that the financial technology firms are going to be able to participate in that as well, and so they want to get in early.
Just like investors in the housing stock, if you are at the bottom and you get a doubling in the price of housing as a general level,
Right.
then you can be wrong in some markets because a rising tide raises all boats.
Oh, absolutely.
You can make some real mistakes.
Right.
Sort of
So,
like,
I guess they're just betting on the whole sector and saying, I want to get in now while I can, and then ride it up to the top down the road sometime. We all know it's going to turn sometime, right?
because we all believe in cycles.
Exactly.
All right, well, this has been FNC's Morning View. I'm Bill Rayburn with our fashionista, Dr. Bob Dorsey. You all have a fantastic day.